on a scale of 1 to 10, with 10 being complete societal collapse and 1 being, the best day of your life, how bad are things right now in the oil market?
So interestingly, I would put that, objectively looking at the oil market right now, prices, inventories, time spreads are essentially the a measure of how scarce barrels are. We'll get back to that in
There
a
you go.
second.
Yeah.
The objectively right now, looking at those indicators, we're at kind of like a 6 or 7. I think that's surprising because I would say that I would have expected us to be at an 8 at least right now, if not a 9. And I think, 10 is going to be reserved for the worst case scenario where if we were back in March and we didn't get the ceasefire and Iran started bombing regional oil production infrastructure, that's the 10. That's the kind of societal collapse, $250 plus oil kind of global advanced world recession, emerging market depression likely. That's the kind of situation we would have been looking at. We have thankfully, I think, avoided that scenario, at least for now. There's always a chance that we get back towards that being a risk. But I think we have, with the announcement of the ceasefire and the clear signs from the Trump administration that they do not want to re-engage in the war fighting and the actual kinetic action, that this is now a long slog negotiation, which brings us to other issues in terms of prolonging the closure of the Strait of Hormuz. But, even if it takes an extra 2 months, that is really, really bad. And we'll talk about why that's bad. But it's better, even that is better than, say, a different scenario where a bunch of stuff got bombed and then it's going to be offline for years. So we have avoided that worst case scenario. So let's talk about the scenario we're in, which is that, the main kind of biggest tail risk we seem to have moved past. But now we're in this kind of stalemate where the Strait of Hormuz, the most important oil artery on the planet, as well as an artery for many, many other kind of critical feedstocks, mostly still related to the oil and gas industry, has been closed now for going on. I've lost track of how many days. I used to keep track of how many days it was closed, and now we're 2+ months here into the closure. What are we looking at? Yeah, 2.5 months. That's a lot. At this stage, you've seen... maybe let's just bear down on the barrel counting for a second, just to kind of parameterize kind of the audience's understanding of the numbers we're talking about.
Totally.
Prior to the war, the Strait of Hormuz, shipped roughly 20 million barrels a day of oil, which is, just for perspective, roughly 4 times as much as Canada produces in total, and the entire, basically 20-ish% of global oil production and demand. For nice round numbers, let's assume it's 100 million barrels a day. It's slightly higher than that now, but let's keep the math really easy. So 20%, big hit. Thankfully, we had some offsets, most notably the Saudi East-West pipeline, which transferred a good chunk, between 4 and 5 million barrels a day, depending on the source you're looking at, from the Gulf to the Red Sea, as well as a couple other pipelines. There's one that the Emiratis have at the port of Fujairah on the Gulf of Oman side. And up until recently, over the last month, Iran was still exporting a lot of its oil, most of its oil. So all of this helped reduce that 20 million barrels a day to more like, let's say, 13 million barrels a day. And that's the volume of oil that for the past 2+ months has been forcibly shut in across the Gulf. And the reason it's shut in is that they don't have anywhere else to put it. They've overfilled domestic storage tanks. You've run out of tankers. And for anyone in Western Canada, going back to 2018, the idea of a lack of egress forcing curtailments or production shut-ins should be very familiar. It's the same functional problem. Now the world is digesting this loss of, the largest supply loss in the market's history, and the cumulative effect of those 13 million barrels a day that have been shut in now for 2+ months we're looking at roughly 700 million barrels of oil that we had expected to be produced this year that now isn't being produced this year. And, banking and factoring for restart times and everything else, we're talking about at least 1 billion barrels, probably more like 1.5 billion barrels, which is a lot of oil. Mm-hmm. So the question is, why aren't prices higher right now? Because I think that's the question that's been dominating the past month of my life.
Totally. Like, when you read the financial news, certainly my sense is everyone is kind of wondering when the shoe is going to drop. It feels like we're sort of Wile E. Coyote run off over the cliff, but we haven't fallen down yet. And the question on a lot of people's minds is, when is the market going to take this as seriously as it feels like it should? So what's your sense of that? I mean, is the market seeing something here that the rest of us aren't? That is it looking around the corner as sometimes is said, or is it just completely blind to what is happening out there?
Yeah, so I think let's break it into kind of what's knowable and what's not knowable. So the knowable aspect, there are reasons that we can justify that prices pulled back from their recent highs in late March, early April. Most notably, I think the announcement of the ceasefire and the avoidance of kind of a slip into an even steeper and kind of more worrisome war in the Middle East. That, I think, given how apocalyptic that would have been, even a kind of a small probability of that was worth a lot on prices. So removing that or reducing that probability has kind of a leveraged effect, or kind of a bigger than just a linear effect on the price. So I think that is a justifiable reduction in prices and one reason we've stepped back a little bit. The other issue and the other factor here is that we've been processing this war, as I'm sure you have daily, like the rest of us, kind of on a tweet by tweet, kind of minute by minute, things are changing. That makes us feel like a lot is happening all the time. But in the oil market, things move so much slower. Ships coming out of, like, for instance, someone had asked me why there was a jump in U.S. imports of Iraqi data in the latest weekly data published by the U.S. Department of Energy. And I was like, oh, that's interesting. Yeah, because you would have expected that Iraq's not exporting much oil right now. And there was a tanker that landed in Los Angeles this past week that left the Strait of Hormuz on February 22nd. So there are still barrels that were shipped out of Hormuz that are still kind of finding their way to their final destinations and are taking even longer than we would have expected. So I think all of this stuff is lagged in how it's finally hitting the market. And I think to a degree, while I would have expected more panic and a kind of a faster and more durable run up in prices, given the fact that we started the year in an oversupplied situation, a weak market outlook, high stocks, you can make the case that the prices we have right now are reasonably justified based off of the fundamental inventory data we have access to right now. But if that continues and Hormuz remains closed, it still points us to the same direction, which is that prices need to continue to grind higher to eventually destroy demand.
I guess my first question has to be, have you been surprised by two things? One, prices, where they are today. Two, we've had this massive disconnect between physical. Even today, traders are saying to me, guys, physical cargoes are trading at premiums versus financial. What do you make of all of this?
I think I can explain what's going on in the oil market. What I can't explain is what's going on in the equity market.
Yeah, true. That was going to be the other
That's the
thing.
one that I am absolutely dumbfounded. And I did this Bloomberg interview this week and compared it to Jaws, when that scene where they go, the beaches are open, and all the kids running out there, and you see the shark fin swimming around in the shoreline. And,
Great analogy, yeah.
And I think you look at the draws that we had 2 weeks ago, 25 million barrels. You and I have been doing this forever. If you got 25 million barrels in the middle of the shoulder months, and then it came out, and then everybody's, oh, the API showed another 25 million. And then the ones that came out, they were 11 million barrels. And they're going, well, it's only 11 million barrels. And if it's just the level of complacency. And so, that's the part I just don't understand, how people can just ignore the severity of what is coming, their direction.
So you think for oil, it's just a timing thing? Like, we just haven't hit the worst yet.
Here's the way I think about oil. It's like, there's a big difference between a deficit and a shortage. We're in a deficit. Demand is above supply. We are drawing inventories. And so you're borrowing oil from the future right now. And you're going to do it until you hit minimum tank levels. And they're all out debating, the banks or where minimum levels. I don't care. Is it, but all I know is distillate is in the U.S. is 100. We are at 102.
Yeah.
And you were 120 a few weeks ago. if you're 120 weeks and you're 102, you're going to be out.
Yeah.
And right as you go into the summer driving season. And I just don't see all this debate about where this is. Maybe these people think that you can draw the full 100 million barrels. By the way, even if you could draw the full 100 million barrels, you still would be out.
Yeah. So let's unpack a few things because I have a few things to say about this. First and foremost, yes, a lot of people actually think you can draw down tanks to zero. I've had people come up to me and said, we have 8 billion barrels in stocks. I'm like, you do know you can't go down to zero. Firstly, that 8 billion is like everything. So much of it, 20%, tank heals, infrastructure build out, whatever. But I do think I was doing these numbers. We'll publish it soon as well. Coming into the year, we probably had a bigger surplus than, we knew that the oil was there, but we calculated just at the start of the conflict on the crude front, the market probably had 375 million barrels of excess, right? Yeah. Everything that we built last year, like February as well, we built. So that just gives you, to your point, we are absolutely in a deficit, but we are not in a shortage, right? So I think that's the difference. And probably end May, early June, that inflection point is coming, right? So again, I guess the question is, we did rally and then we came off. And that's why there's a sense of complacency, to your point. People are like, we somehow have solved it. Like, why do you think that's in the mind? Like, that's the bit I struggle with.
I called up a bunch of my friends in Asia, because Trump's on and off. Notice that he always cuts a deal every single time the 10-year hits 4.4%.
Yes.
It's the interest rates that scare him. And crude drives the break even. And so if he can keep crude under control, he keeps the interest rates under control. And that's the second biggest line item in the U.S. budget. So clearly that's his motivation. Now, I'd say these people in Asia I talk to, they all think that Trump runs the show, that the United States is in the driver's seat. And you and I both know that is absolutely
not the case.
By the way, the point is actually, it was around March when I realized, this is the hopeless cause. As somebody put it to me, they go, have you ever looked at the other side? I think I said this last time, the other side of the strait. It looks like Afghanistan. There's caves in there. All you need is a guy with a rocket launcher and some drones sitting in there, and it's a hopeless case. You can, there's no way you're going to force that thing open. Well, and which then leaves you with the potential for a deal. But the U.S. holds its ground on the nuclear enrichment of uranium. And if I'm Iran, I want war reparations.
Yeah.
They bombed us.
Yeah.
And the other thing too that I don't think is, you talk to people in the U.S., they all go, oh yeah, U.S. is winning the social media war. And then if you talk to everybody outside the U.S., Iran's winning the social media war. And I'm not going to say it here. I have a 7-year-old daughter that goes to school here in London. The stuff she comes back and tells me that she's hearing on the school ground, it's unbelievable. And I don't think Americans, in fact, I was with a group of Americans having dinner last night. They don't understand that. And I think that at the core is a complete misunderstanding of the dynamics at play here. And I would say, I don't think they think that it was never about missiles being thrown in one direction. It was all about once they closed the strait. One thing I found quite humorous that came out this morning was Trump goes, my only goal is to open the strait. It was open 2 months ago.
So those inflationary pressures are going to remain in the system for many months to come.
Oh, most
kind
definitely.
of even if the situation in the Gulf gets resolved tomorrow, and we have a reopening of the strait within the next few weeks, that's still going to be an effect that is going to take a long time to fully work through the US and global economy.
Yeah. When you look at it, you've got to, with the strait reopening, you'll look at it in two ways. So you'll look at it as crude, of course, the price of gas. The markets are underestimating the impact of the Strait of Hormuz right now. Oh, massively. The price of oil should not be where it is right now. It should be a heck of a lot higher. And so, but the markets are always very optimistic. I mean, it's great to have hope, but you need to have a reality check. And the reality check is this. When you're looking at crude, gasoline shoots up and it floats down like a feather. But you have to take the physicality of trade. The tankers are not where they once were, okay? It takes anywhere from 35 to 50 days for that tanker to leave China to go back to the Middle East. The minesweepers for those vessels to clear out the mines in the strait. They're not there. They take about a month and a half to get there. It's going to take time to clear out there. Then you have to really make sure if Iran is not going to attack. It takes time. And that's when it's going to take at least a year for all of that to get through. Also, we don't know this extent of the damage to the pipelines for Saudi Arabia and the UAE. LNG is definitely down for another 3 to 5 years. The Strait of Hormuz will not be the same when it, quote, reopens. And that's the reality.